Hi, dear viewers. Welcome to Dr. Vijay's lectures on accounting. Lecture number 22. This lecture is on final accounts and balance sheet of joint stock companies, that is, corporate entities. It deals with shares and bonds, stock exchanges in capital market, final accounts of companies, and company balance sheet. Before starting the study of final accounts and balance sheet of companies, the learner should familiarize with so many terms in connection with shares and bonds. If you are not familiar with the securities market, stock exchange, and shares and debentures especially. So please read this slide and the next slide very carefully, twice or thrice. Company is managed by a board of elected representatives of its members and managers appointed by them, even though it is a separate legal entity as per law, owning all its assets and bound to meet all its obligations by itself. A public company can raise huge amount of capital through public issue of shares and debentures. Debentures means bonds, and can grow to any size from local to global through promoting subsidiary companies and joint ventures. Capital of the company is divided into small units of equal value known as shares or bonds. One can become member of the company by investing in shares. Shareholder will get dividend or share of profit only in the years in which the company has adequate profit. Preference shareholders get dividend at pre-fixed rate in priority to equity shareholders. The latter will get dividend at rates declared by the board from year to year. So they are the ultimate risk bearers. One who buys bonds is lending money to the company for a long term at an agreed interest rate. He gets interest in all the years and redemption of principal amount on maturity. The least risky is bonds, and naturally the earnings will also be lower, better than earnings on deposits. How? I have understood from the lecture on slide 2 that a corporation can raise funds from public through issue of shares and bonds. Shares are ownership securities. There are equity shares and preference shares. Preference shares are agreed to be given dividend at a fixed rate. Ordinary shares can get dividends as per the rates fixed by directors, declared by directors from year to year. Anyhow, the priority is for getting dividend is to preference shareholders. Shareholders can get dividends, whether equity or preference, only in the years in which company makes profit and the board declares dividends. Bond holders are lending money to the company, so they are supposed to get interest every year, whether company has profit or not. And on maturity, they should get back redemption of their principal amount. Now let us proceed to slide 3. Please read it. Shares and bonds are issued by companies at par or at premium or at discount depending on the market conditions and reputation of the company. The price is payable by the subscriber in installments as application money, allotment money, and calls. Calls can, however, be paid in advance. A shareholder, if he wants, he can pay the calls in advance before the company actually making the call. Company may offer interest for advance payment of calls. Those who make delays in remitting calls may be charged interest for the period of delay. At what rate interest can be charged on calls in arrears and paid on calls in advance will be stated in the Articles of Association. Listing with stock exchange is necessary for issue of shares and debentures. The shares and bonds of companies can be sold and bought through stock exchanges. Stock exchange is the market for buying and selling of shares, you may be knowing. Shareholder can earn profit through selling his shareholdings if the prices are favorable in the market. The second-hand buyer of shares and debentures enjoy all the privileges of the first-hand buyers. The issue and trade in securities is subject to strict regulations and supervision of government agencies like SEBI, Securities and Exchange Board of India, in India. The market for trade and speculative deals in long-term securities is known as capital market. Now let us try a simple problem on final account of companies. Trial balance of Myco Limited as on 3rd December 2018 is given. Debit balances at first. Debit balances. First is opening stock. Then sun debtors, bills receivable, cash at bank, cash in hand, land and buildings on 1st January, furniture, fixtures and fittings on 1st January, motor vehicles on 1st January, dividend paid. That is dividend paid to shareholders during the year, during 2018. Purchases, bad debts, insurance premium paid, direct expense of purchase, general expenses actually paid, returns inwards. The total of debit balance is 7,256,300. Credit balances in the trial balance of Myco Limited for the year ended 30th December 2018. First item is called up and paid up capital. We have seen company collects the installments of share price from shareholders in installments of obligation money, allotment money and call monies. Called up capital represents whatever amount is called up by the company to pay so far, and paid up capital represents the amount which is actually paid. Here the entire amount which is called up is paid up, and so there is no call scenarios. Second item, 7% debentures on 3rd December. Company has issued bonds carrying 7% interest during the period. And next is general reserve. It is practice of companies not to transfer the entire net profit, not to distribute the entire net profit as dividend. A part of the net profit is kept apart for facing contingencies that may occur in future. So this general reserve represents the amount accumulated from the past years in profit which is kept apart. Next is proposed dividend brought down. This is balance of proposed dividend account brought down from previous period. It's meant for distribution of dividend during the current period for the profits of previous period. Dividend equalization fund is another reserve which is meant for specific purpose of keeping up consistency in distribution of dividend. This also accumulated profits of past years kept apart for some purpose. Next is sundry creditors, then bills payable, then sales, then profit loss account balance brought down. Profit loss account, we know, of companies do not close. Whatever balance standing is in profit loss appropriation account is brought down and shown, carried forward to the books of the next period. So this is balance in the profit loss appropriation account of the previous period which is brought down. The last item is returns outwards, that is purchase returns. Total of trial balance is 7,256,300. The same total on both sides, so it is tallying. Slide 6 gives the adjustments required. First is closing stock, 7,96,000. Next is dividend proposed, that is dividend proposed for the current year. This is to be distributed during the subsequent year. Now, dividend unclaimed, where the dividend is declared, some shareholders may not respond to it and they may not claim the dividend. They may not collect the dividend. That is dividend unclaimed. Company has to show it as a liability in its balance sheet. Outstanding general expenses. Provision for doubtful debts has to be 5% of sun debtors. Prepaid insurance. Depreciate furniture and fittings and motor vehicles at the rate of 20% of closing book value. Depreciate land buildings at a rate of 10% of its opening book value. Interest on debentures is outstanding at 7% per annum. We know debentures are distributed. The interest payable for it is 7%. that is not paid for the current year, so it is a liability. It has to be adjusted. Next is transfer $30,000 to dividend equalization fund. We have seen dividend equalization fund. Every year out of profit, 30,000 is to be transferred to dividend equalization fund. And next is transfer not more than 2 lakh rupees to general reserve. General reserve also is there out of the profits, whatever possible, but not less than 2 lakhs rupees. Not more than 2 lakhs rupees is to be transferred to general reserve. The last two items, transfer to dividend equalization fund and transfer to general reserve, will have to be shown in debit side of profit loss appropriation account. We are starting preparing final account of Myco Limited for 2018. Look at the heading, Trading and Profit Loss Account of Myco Limited for the year ended 31st December 2018. For the whole final account, title is common. In the debit side, expense and losses, and on the credit side, incomes and gains. First item in debit side to opening stock, then to purchases minus purchase returns, then to direct expenses. On the credit side, by sales minus sales returns, and then closing stock. The trading account shows a gross profit of $1,584,000. Slide 8 shows profit loss account. The gross profit is brought down from trading account to profit loss account on credit side. Then items expense losses in debit side. General expenses plus outstanding. Insurance less prepaid. Interest on debentures due. Interest on debentures at the rate of 7% of the value of debentures. To bad debts. To provision for doubtful debts, 5% of some debtors. Then depreciations. For land and building, 42,200 for the value given trial balance. Furniture and features, 54,200. Motor vehicles, 37,800. Only these many items. The net profit is 5,39,800. Profit loss appropriation account part. From profit loss account, the net profit is brought down to profit loss appropriation account. But before bringing down the net profit, the balance in profit loss account of previous year, that is to be shown. Here the balance brought down from previous year is 1,04,500, and after that the net profit is brought down from profit loss account. It is 5,39,800. In the debit side, all appropriations to be done, payment of dividend, transfer to reserves, etc. are to be shown. The proposed dividend proposed for this year is 42,000, that is to be shown here. Then amount to be transferred to dividend equalization fund 30,000 rupees, and to be transferred to general reserve 2 lakhs rupees, 200,000 rupees. So whatever balance comes in profit loss appropriation account at the end is 3,72,300. That is to be brought down and to be carried forward to the books of subsequent year. Number 10 shows two notes which are important in the preparation of profit loss appropriation account. First one is the title is common for the whole final account, trading and profit loss account. It does not mention about appropriation account. Appropriation account is just an extension of profit loss account. Where there is manufacturing activity, then the title will also show manufacturing account. That is manufacturing account, trading account, and profit loss account. The second thing is the balance shown by the appropriation account. It is kept in that account itself brought down to the subsequent period. It is not transferred to capital account and closed. In the case of partnerships and sole traders, we know the profit loss account is closed every year by transferring the balance standing in it to capital accounts. But in case of companies, it is not done so. Balance sheet of Myco Limited as on 3rd December 2018. In the debit side, we can see debit side left hand side, capital and liabilities, and on the right hand side assets and properties. The balance sheet is prepared as in the form prescribed in the Companies Act, and therefore there are titles for different heads of items. First is share capital. The titles are shown in all cap. First in the debit side is, in the left hand side is share capital. Under that, first you have to show authorized capital of the company. The total capital that company can raise through issue of shares as is stated in the memorandum of association. Normally this will be a very high figure, but now companies issue only a part of it. Second is issued, subscribed and called up capital. Here called up capital and paid up capital are the same, and therefore that figure you can show if you want, but not shown here anyhow. Next is called up capital, that is equity share capital fully called up and paid up, 400,000 as per the balance sheet, as per the trial balance, sorry. Next head is reserves and surpluses. Under that, general reserve 500,000. It was 300,000 in trial balance. 200,000 was created this year, transferred to reserve this year, and so it has become 500,000. Dividend equalization fund, it was 1,20,000. 30,000 transferred this year, and so it becomes 1,50,000. Profit loss appropriation account balance is the balance, final balance shown by profit loss appropriation account, which is to be carried forward to books of next year as profit loss account balance itself. It is 3,72,300. Then comes the heading long-term liabilities. Here the only long-term liability is debentures. 7% debentures issued by the company, that is shown 700,000. Okay, the liability side does not finish, that in next slide. Now on the asset side, fixed assets. All fixed assets minus depreciation. Land and buildings less depreciation. Furniture and features less depreciation. Motor vehicles less depreciation. Now the rest of the balance sheet is in next slide. Let us proceed. The rest of the balance sheet, in left hand side current liabilities and on the right hand side current assets. Current liabilities, first one is sundry creditors, then bills payable. Unclaimed dividend, remember unclaimed dividend is a liability, has to be shown as a liability. It may be claimed in future. General expenses outstanding. Interest on debentures payable to debenture holders which is not paid, it is a liability. Proposed dividend 42,000. Dividend proposed for the profits of current year, it is to be distributed during the subsequent year. Okay, now on asset side, current assets, closing stock, sundry debtors less provision for doubtful debts, bills receivable, cash at bank, cash in hand, and insurance prepaid. There is another heading, fictitious assets. There is no item in this problem which come under that. If profit loss appropriation account shows debit balance, then it will come, that is loss, it will come under fictitious assets. Similarly, other loss of capital nature like discount on issue of shares, discount issue of debentures, such things also will come under that heading, but no such item is there in this problem. Okay, so trial balance sheet finishes. The total on both the sides is 3,285,100. Balance sheet is tallying.